Two big numbers about to be released. Weekly jobless claims and the first reading on third quarter GDP. Looking for a 3.2 estimate, the range anywhere from 2 to 4.8. Rick Santelli, Jim Urio at the CME, and Steve Leisman here on studio. Rick, let's have it.
Oh, man, here we go, up 3.5 on GDP. Expectations were real. The only thing that may not be real is the lasting effect of positive GDP. Consumption, 3.4. Wow, what a reversal from down 9/10 last time we looked at this. And it's also above expectations. The price index, well, it's a much more moderate number than we had priced in, up 0.8. And year-over-year PCE, let's do quarter over quarter. It's up 1.4, right on expectations, but of course lower than the 2% we looked at last time. Jobless claims, a real nick, down 1,000 at 530,000, and continuing claims, 5.797 million. That's a rather substantial drop from 5.94 and 6.9, the high reading on this series. So, there's a lot of issues that make interpreting these claims, this claim data series more difficult. But the continuing claims drop, one would think, is got to be leaning into good news territory a bit, all things else being equal. And we're seeing, of course, the Dow that moved from up about 20 to up 70. We're looking at an interest rate environment that spiked up several basis points, but still a half a dozen basis points shy of 350 on the 10-year note as we go into the last of this week's coupon auctions. 31 billion, 7 years. Let's see what our group thinks of this data.
All right, we'll get some more reaction right now here. Steve, over here, to sort of, what were you weren't really gasping, but you were certainly interested in a couple of those points.
Yeah, the continuing claims number was really interesting. We have to check as to whether or not these are people moving into other claims that aren't part of the continuing claims. But if it stands, it's one of the better drops I can recall. And I think Rick's remarks on it, that it really stood out. This decline of 200,000 in claims is potentially good news. Although, again, I don't like the weekly number of 526. We want to see that number get below 500,000 into the 450 range as a sign of job growth. Looking at the GDP numbers, sort of strength in places we expected, and maybe a little more strength than had been expected in some of those places. Residential up 23.4%. That's that sort of nascent rebound we had in home construction. So that's a good thing. Equipment and software, kind of light at 1.1%. Personal consumption right on the mark at 3.4%. And then non-residential investment didn't fall as much as had been expected, minus 2.5%. I'm looking at what government did, up 2.3%, with the federal government up 7.9%. So you're going to have this debate that's been out there and will continue to be out there. How much of this was artificial? How much was cash for clunkers? How much was first-time home buyer tax credit? And where we are in this transition of government help to private sector-led growth. And I think we're still in early days, is the best way to put it.
What do you make of these numbers, Jim?
Well, what I was just thinking about is this phenomena where you get growth and you have this trailing indicator of joblessness. And so the politicos, the president, is always in this dilemma. You sort of want to talk up the economy. You want to get consumers spending again by saying, hey, we're coming out of this. But on the other side of that, you've got the guy without the job saying, what do you mean we're coming out of this? I'm still unemployed. Don't talk to me like that. And so it's always a dilemma for the political class to figure out how do you be accurate with economic information without hurting yourself politically.
We're going to find out more tomorrow when they release the number of jobs saved or created from stimulus. Right? That's all coming up tomorrow.
How would you trade it, Jim Urio?
Well, I traded it incorrectly. I thought what happened is that the booming stock market, everything, there was a little too much good feeling. I thought those optimistic estimates were ridiculous. I had a position on that turns out to be wrong, so I have to rethink a little bit. This is a solidly good number. Yes, they're going to pick it apart in the next hour or so. This is interesting to me because what I think it's done is it's taken the correction away. I think right now still the dollar's the dog and the stock market's the tail. And we saw that weak dollar trade get really crowded a week ago, and all of a sudden the dollar's strengthening up a little bit too, and that allows for us to correct in the stock market. But we came right down to a technical level of 1035. We're bouncing off it. I think maybe, the fact that Norway raised, the fact that Australia raised, and maybe people are looking at our Fed meeting next week, and everyone is so short the dollar and thought, yes, there's so little a possibility that they say anything hawkish, but in case they do, I don't want to look stupid, and that's why people are probably taking some of that trade off. But either way, this is shocking to me. I think that. Jim, why do you
So shocked, though, you still might have the right position. You know, this GDP number, many have seen this coming down the pipe for months and months. The issue isn't whether you get a quarter or two that averages 5%. The issue is what you're left with after the inventory cycle is over with. So, you know, you could still see the stock market already have this priced in, big guy.
No question, but I just thought, you know, inventory cycles, cash for clunkers, all those things went into it. But for me to see estimates go from a negative 0.9 to a 3.3, to me it seemed like such a huge jump. It seemed like a little bit out of the question.
Well,
I wish I would have listened to those guys who saw it coming down.
If you tore every building down and house down that wasn't being occupied or saw occupancy go down, you'd see a huge jump in GDP as you rebuilt them. But it isn't necessarily the kind of GDP that we all want to create jobs.
Yeah, and Rick earlier, earlier we talked to a strategist who said if you saw a weaker number, maybe up 2.7%, that could even maybe be good for the markets because it would mean that maybe the government wouldn't be pulling back from a lot of these programs quite as quickly. Is there a chance that as people start thinking about this, Rick, they worry that this means the government will get out sooner?
No, I don't think we ever have to worry about the government getting out sooner, and I think this number in many ways could be an aberration that we all knew was coming.
What's today, Rick? What's today? Today's the day the government's going to stop buying treasuries.
No, they ran
Come
out
on,
of
they're
money,
getting out,
Steve.
man.
They ran
Give
out
them
of money,
credit where credit's due.
And they still have over $350 billion bucks left.
They didn't run out of money. You're wrong about that. They can print as much money as they want.
25% of everything issued, Steve. What a surprise.
That's mortgage-backed securities, Rick. Come on, they're getting out today.
One thing, too, for you, Steve.
Yeah.
Steve, yesterday was also the day that they said they were going to increase the tax credits for the home buyers. I mean, you know, to make policy unnaturally benefit home prices and home buyers, what could possibly go wrong, right? I'll tell you what could possibly go wrong. They didn't know 2 and 03. I mean, it's a ridiculous public creation type of scheme.
I think it's worthwhile, though, Jim, to make a distinction between what the Fed is doing and what the Treasury is doing. The point I'm making very simply is there was all this concern and exaggeration about the Treasury, the Fed monetizing the debt. My point is that today at 10:15 will be the last purchase by the Fed of Treasury bonds in this cycle of purchasing $300 billion.
Do you think they're going to be able to unload some of those securities, especially the mortgage securities, Steve?
You know, I think the mortgage securities is a different question from the Treasuries, Rick, because I think...
And how much more of the mortgage security money is spent?
Here's the deal. I think the Treasuries they probably hold on to because at the end of the day, their Treasury portfolio is about what it was before they ended up selling it off. Okay?
There's not a problem there.
So,
Steve,
but the mortgage-backed they probably hold on to for a while.
Okay, if the stock market starts to slide again, the stock market starts to slide and erodes confidence, all of a sudden, everything's out the window. It's game on again for all the quantitative easings, everything they do. That could happen in 2 weeks, couldn't it?
I'm not sure that's the case, Jim. I mean, if you think that the Fed is going to come in and react to what the stock market's doing by itself, I think you're misreading the Fed. I think they'll respect the general financial conditions. If you have a spike in LIBOR, if markets look like they're dislocated the way they were before, then you might have a different story. But if it's just the stock market, I don't think that would move the Fed.
Hey, Steve, this number's great for the Fed. They're going to brag. The government's going to brag. Look at how tremendous just GDP growth is. But they're not going to take anything away because they know there's a big question whether it can last or not.
Rick,
I'm getting the rap signal, Rick.
Well,
just so you know.
You've been getting the rap signal for like 4 minutes.
Well, it wasn't me continuing the conversation, Joe. For the record, play the tape back.
Hey, Rick, Yankees or Phillies?
Well, you got time for this, right?
I think I have to go Yankees, and I hope Mr. Quick back there isn't too mad at me.
You're in Chicago and you like the Yankees?
You know what? I just can't help it. I think that I enjoyed their last series, and you know what? To me, it's the entertainment value, and I think they're pretty exciting.
Jim, what do you say?
Phillies. I hate the Yankees. I'm sorry to all my New York clients. I hate the Yankees. It's like rooting for the Bulldozer over the Daisy. I'll take the Phillies over the Yankees.
That's what I was looking for from Rick. But Rick is an enigma. You can never tell. All right. Thank you.